from the ACCA in relation to ACCA paper P7, Advanced Audit and Assurance. My name's Steve Wittenbury and I work as a subject matter expert for BPP Learning Media in the UK. And today I want to try and talk you through a specific type of question in relation to matters to consider and evidence that you should expect to find within the P7 paper. A fairly frequently occurring type of question that a lot of candidates have sometimes struggled with in the past. Let's have a think about what it is we're going to try and talk about today. I'm going to use a specific recent exam question from December of 2013, question 3, part A. This is in relation to a specific event within a company where you are the external auditor and you have to try and consider the impact of this event and what it means as far as your ability to still deliver a valid audit opinion. During this presentation, I want to try and talk about the style of question, think a little bit about what the requirements are saying, try and focus upon what the facts in the scenario actually are, think a bit about what matters we'd consider and what evidence we'd be looking for, maybe try and give you the opportunity to practice this question yourself so that you can then see how well you got on, and then try and focus upon some specific conclusions that you can use for future questions when it's your turn to do it on your own. Okay, the requirement itself, as I mentioned to you earlier, is a very typical type that we've seen in lots of different P7 exam sittings in the past. Matters that you should consider and evidence that you should expect to find. And the basic rationale behind this type of question is that you are the audit manager and you are reviewing the work that your team has done. You have a team of minions who've gone out and done your work, and it's now your turn as part of good quality control procedures within the firm to explore what they've done, to inspect it, to make sure that it's up to scratch so that they've done all the work that they should have done and that they've left no loose ends. So that's why you're always asking, in relation to information presented in the question, what are the matters that are important and what do they then mean as far as your ability to provide an opinion? Have you got all the evidence you need in order to deliver that opinion? This type of question creeps into the P7 exam question a lot, and it's really, really important that you focus on these types of questions to be fully prepared when it's your turn. Okay, let's have a think about some of the facts in relation to this particular scenario. Hopefully you've read the scenario already. If you haven't, don't forget this is an online presentation that you can pause, you can rewind and you can play again. So if you've read through the scenario, let's have a quick think about what we know from the information that's presented. We know that it's in relation to a coal mine, and we know that this is a regulated industry where there is a specific regulator mentioned. We also know that this regulatory requirement to have a licence could be something which is important enough to draw attention to later on. We know that there's been an accident at the Ledge Hill mine, and we know that this happened 16 days before the reporting date, so that it's fairly important that we get this right, particularly when thinking about the events and conditions in existence at the end of the year. We know that at least a third of this mine has been permanently closed. We also know that there will be improvements required to the mine, and as a result those improvements might require the investment of certain sums of money. We also know that there's been some damage to the landscape above, which includes residential properties, and we know that there's been a survey commissioned to establish the extent of this damage. We also know that as a result of this damage, residents are being affected, and consequently there's a possibility that there may be extra costs incurred, which the company has to acknowledge and reflect appropriately within its financial statements. And all of these are things that we need to build into our approach as the external auditor to make sure that they are shown truly and fairly within the financial statements on which we will provide our opinion. The final aspect, which might perhaps be the most important aspect, is the fact that the company is not going to report this to the regulator because it doesn't feel it has to. It's made this unilateral decision to not disclose this accident to the regulator because nobody's been hurt. It does beg the question that in the real world, were this to happen, there would probably be some kind of news or media interest, which might therefore mean that the idea of the company hushing this up is unlikely. But we'll have to park this for the time being and move on to the actual requirement itself. Now, hopefully you've done this question, but if you haven't, now's the opportunity for you to have a crack at doing it. For this specific part of question 3, you'll find that there are 14 marks allocated in the original exam structure. That would be using the 1.8 minutes per mark rationale that we generally tend to work on. 3 hours, 100 marks, that's the way it tends to work out. You would expect to spend roughly in the region of about 25 minutes reading, planning, thinking and writing in order to deliver an answer to this. So if you want to pause now and spend up to 25 minutes attempting an answer, I'll assume that you are familiar with what the solutions are telling you and that we can then go through it together. Okay, let's consider the matters that we need to consider as part of our role as being external auditors. I think there's a few factors that you can build in, and I'm going to try and give you a structure that you can work through when trying to concentrate on questions of this sort in the future. The first and most important thing for your perspective as the external auditor delivering an opinion on these financial statements is, does this matter? Is it material? Now, we are usually provided with information in questions, and this one is no different. We're told that the value of the mine is 10 million. We're told what it is in relation to the profits and also the assets of the business. And in this instance, we would say that although it's only a third of the mine that we believe to be affected, that still demonstrates 18% of profits and nearly 2% of assets, which suggests that in terms of the materiality thresholds that P7 tends to work within, that these are on the borderline of being quite material to the business. So it does matter, therefore we can't just ignore it. Remember, if we weren't worried about the materiality aspects, we'd still record this as a non-material potential series of issues and think about whether they, in aggregate with other factors, might be a problem. The next thing after thinking about materiality is to consider the risks that this particular specific scenario presents. And in this instance, forgive the pun, you're going to have to dig a little deeper into the scenario in order to pick out all the relevant bits. We're told, for example, that the mine has been affected. It may therefore, as an asset, be impaired. We may perhaps have seen certain assets lost within the accident. We know that no human assets have been lost, but that doesn't mean to say that things such as mine carts and other equipment might not have been damaged at the same time. We know that the revenues of the business might have been affected for the period of time that the mine was unable to trade. And that may be, to some extent, fairly significant. So we would expect to see a change in the revenue patterns, which our analytical procedures might perhaps have to consider. We might also have considered and need to fully consider the impact of provisions for this particular business, because on this basis there's a series of areas where our client may have to provide for things that might include the amount of money to be spent on improvements, both capital and revenue, the amount of money that we might have to spend in terms of relocation and perhaps even compensation costs for the domestic residents affected above, and possibly even the danger that a regulatory fine might be coming the way of our client who may need to provide for that as well. Now you'll see nestled within the issues that the question has to consider the fact that there's a possibility of going concern being affected. And I think it's important that you get this in context. This is one of only 10 mines that the firm has, but remember this is only one, and it's a small one by contrast to all the others if you think about the size of profits and think about the size of assets that this 1 out of 10 actually represents. So it may be that the impact of this particular mine having a problem isn't necessarily going to jeopardise your client's going concern status, but what it does mean is that perhaps if reputation is something which is affected by this in relation to just one mine, it could be that the rest of the firm has some potential adverse comments attached to it which might have an impact upon its going concern. So this wouldn't be the first thing I would say that's a matter to consider, but it would certainly be something that I would want to include within my answer. The next thing to think about then is if we've got these particular risks, how do we know that these have been treated satisfactorily by our client? The way of ensuring that things are reflected truthfully and fairly within the statements are to ensure their adherence to the accounting standards.